Selling is the hardest part of investing. The reality is that fundamentals drive stock prices over the long term. But in short term, psychology sets prices. For most investors, they have a very hard time selling. If their stock is doing well, they don't want to let go of it. They want to hold on to it in case it keeps going up. And so they can't sell. If the stock is doing badly and the price is falling, they don't want to accept their loss and so they can't sell. The reality is you must learn to sell systematically or you're going to do it badly. So there are some tips I would suggest here. First, you should consider selling any stock you hold that starts to show a weakness in certain areas. Now you can find the information online to help you track the variables or factors we are about to talk. But my first selling tip is around earnings per share. You should consider selling stocks when earnings growth is slowing or faltering. This is especially true if the stock was previously growing earnings quickly. So if we had a stock that was growing earnings by 20% year over year for the last few years, and then that growth starts to tail off, and now it's only growing by 5 or 10% per year, it's time to sell. That company, they have reached a saturation point with their business model in many cases, and they're just not going to be the same level of performing they once were. It's time to sell. My second tip would be to sell based on relative price strength. Sell stocks where the relative strength compared to other stocks in their industry begins to falter. So if stock A is a standout in its industry for a long time, for a couple of years, and then all of a sudden its competitors are starting to catch up, and stock A stock price isn't performing as well, it's time to sell. Look for stocks that are going to outperform their peers. Where there is momentum, sell if stocks lose their momentum. Tip 3. It's about industry relative strength. You want to look for stocks that do well in a leading or strong industry group. Avoid stocks in lagging industries. Sell those stocks if they are in an industry that's a perpetual problem. Certain industries go through a cycle. Energy stocks, for instance. That industry is not going to turn around instantly. Next, make sure that any stock you're going to own has a strong profitability. Sell stocks that have poor profitability. If a company can't consistently earn a profit, there may be a structural problem with the business model. So sell stocks that either own a minimal profit or don't earn a profit consistently over time. Finally, institutional investors are a very important group of investors for any stock that's out there. If institutional investors are selling a stock, you should dump it also. The price pressure from institutional investors selling their stock is going to be acute, and it's going to keep prices falling in most cases. Don't be left holding the bag if the smart money is dumping the company. Sell that stock. Now, all these are just general rules of thumb. Don't use them as specific indicators for your particular portfolio. But you should consider these rules of thumb as they relate to your situation and then make your own decision from here. Thanks.